Thank you so much for tuning in to the Acquisition IQ podcast. My name is Nathan Bird, and I'll be your host today. Today, we are joined with Chris Warren. Chris is the co-founder of Debt.help. He helps businesses turn chaos into clarity with deep expertise in strategic planning, data analytics, and team optimization. He builds high-performing operations by combining leadership, systems, smart sales teams, decision making, with also an MBA in leadership and a master's in business analytics. Chris operates at the intersection of revenue growth and operational excellence, making him the go-to expert for founders looking to scale. Thank you so much for joining the Acquisition IQ podcast today.
No, it's good to be here. Good to see you again, Nathan.
Absolutely. It's always good to obviously continue communications with all of our founding members as a part of the network, but also just founders that are growing, founders that have grown, and founders that are wanting to help others throughout the problems that they typically will face in business. So share with us a little bit more of your background and what got you into where you're in today.
Yeah, not a problem. Um, so sales is my first love, right? As a young professional, it was right out of college, meaning didn't graduate the first time around. Had to go back and do that much later. Got into sales. Did a lot of time in sales at all levels. Started, telemarketing, business development representative, to closer, to team leads, to management, to founding my own company and sales company. Over the years, been in sales for financial services, for home-based construction services, business to business services like marketing and agency. Recently back in 2022, me and a longtime business associate decided to get into the debt relief space. So in March 2023, I co-founded and we launched Debt.help. Back then it was branded Debt Busters. And the theme was your superheroes to get you free from debt. So March 1st, 2023 was me, my partner, and one employee from a Craigslist ad in a 400 square foot office in Sacramento. And I think our initial investment and operational budget was blown in about 3 weeks. And so it was a journey through that first year of failing forward, going back, finding more financing, fixing cash flow problems, building sales, revenue operation systems that would last, getting corporate governance in order and accounting in order that would go through M&A scrutiny and build the type of company that investors want to see and invest in. So we were able to grow from there and sort of leverage what my second love is, which is data and systems. Went and got back the college degree, went and got a graduate degree in MBA, then got a graduate degree in data analytics, and leverage that to just keep building some great systems that were data driven. And so my opinion could matter a little bit less. I could get smaller so my team members could get bigger. And it turns out they really like it when I
Yeah.
intentionally make myself smaller so they can get bigger. And we were able to grow and grow and grow. We were able to sell the company within 24 months of going into revenue production. And I'm still today the co-founder and COO of Debt.help, into an earnout period. So I'll probably be with the firm for years to come.
Let's talk a little bit about how you prepped your company. And, sometimes people aren't as proactive as what you're saying as far as when you first entered into the business. So that's a 24 months. So you must have had already known where, in essence, you wanted to go by the end of or that growth. I mean, you don't obviously know everything, right? But you've got to set up some parameters.
Well, if you're an entrepreneur and you're founding a company, ideally you desire either an exit or a major capital investment at some point.
Yes.
And so both of those are going to require governance and business processes from the beginning, or at least very, very early in your company's genesis. Because even if your position is, well, I want to retain equity and ownership and control, and I don't want to go through an exit like and sell to a traditional company or PE firm that might take it over. Either way, your books have to be built in a way that, investment bankers can get into and understand and speak a common language with, and you can pass muster with. So we started that early.
See, and that's good because I've spoken with a lot of business owners and then also service providers that are constantly saying that business owners are behind the ball in the preparation of what their initial or what their end result they desire to have. So,
Yeah,
whether it's an infusion of
it's a
capital or
problem.
an exit, you know.
Yeah, it's a problem. I meet people all the time who seek maybe counsel or help or business consulting. And fundamentally, the questions that are going to get asked are almost always going to be the same, and they're always going to revolve accounting metrics and KPIs around profit and loss. And you have to educate yourself. Like even if your education's done, I highly recommend going back and getting at least certificate level understanding of accounting and double entry accounting methods and QuickBooks and how to read your P&Ls and balance sheets and really sort of digging in deep there. Even though that was never my first or second love, I went and got an associate's in accounting because I knew I had to speak the language and I knew I had to incorporate like fundamental best practices. So when we sat down with accountants and bookkeepers to organize books before a company was even producing revenue of substance, I knew where we were going. And
Mhm.
so that's fundamentally the advice I learned in my 20s was I used to build things with having no idea of where I was going and everything was trying to get picked up like after I had already done something and what's everything's done on an Excel spreadsheet and single entry and it doesn't work and no one wants to invest in it and there's no governance and no one wants to buy it and so you definitely want to get that dealt with up front.
Isn't that interesting? Because think about it, as a founder, you spend so much time at the start and the onset of the creation of your company with a bunch of ideas, ambition, and zero clarity on what you are initially wanting to create, for the world. And it doesn't really discredit your energy that you put towards a project. It's just a matter of doing it the right way. And I think that, you're living proof that you've done it really a little bit of a better way. But obviously it takes a lot of failure to be able to get to that point.
Absolutely. I mean, in the last 5 years alone, I've got three failed business projects, that I was either a co-founder on or consultant on. Another business that we were able to 10x sort of in a consultant role, take sales from, 45, $50,000 a month in revenue to well over $500,000 a month in revenue. And while I failed to get that company through an exit, they're still around today. They're still maintaining the revenue levels that I was able to scale it to. But three failed attempts, right? At starting businesses in all sorts of spaces, and one consultant role that I was able to scale successfully and build the business processes out for and really get the best practices around sales in my first love. Because acquiring the customers that's to me it's the majority of the show. Um, but we did fail to get that company exited, and so I sort of transitioned to what was next, and this was what was next.
This is good. Well, I'm going to get into some strategic questions here. I want to make sure that we're providing some value, not to say that we haven't already. I just want to make sure that we're tactful. Um, so what do you believe most about, high performing teams, and what are some things that you've experienced in your life as far as what doesn't make a high performing team and what does?
What makes a high performing team is when the things that you're practically asking your team to do, one, you're doing them with them, and everyone buys in and understands the asks and the mission. And the mission sometimes can be something that's unreachable. So at Debt.help, our vision is to build a debt-free America. Well, like just on the face of it, that's an impossible ask, right? Our government's, $37 trillion in debt or whatever, and consumers hold $1.4 trillion of credit card debt. Um, but that's an impossible vision, but that's okay. Because the team understands the why behind it and why we're passionate about it and the value that we're providing as inflation continues to drive up pain points for consumers and credit card interest rates, near 30% on average. And then when I'm operationally telling people on a practical level, hey, this is why we're asking you to do this on a daily level. This is why we're asking you to do this with this software piece. This is why we're trying to do this. It makes the leadership job longer and more difficult, but they have more buy-in. And the second they understand the why, because ideally you're hiring competent, intelligent people who are hardworking like yourself. And so typically with intelligent, hardworking people, if you tell them the why, they're going to come with you and they'll do what you're asking them to do as long as they see you doing it yourself. And so the heartbeat of any company I've ever been successful at, whether it was as an employee, as a manager, one I built, one I was trying to consult and scale for, or this project that I'm currently a part of, it has been driving customer acquisition through a culture that empowers sales professionals to do excellent work in the field of getting people to say yes to a value exchange. And that's sort of been the driving heartbeat of any project I've worked on, even on digital physical good sales.
Yes, you're right.
It's similar. So that's
Yeah,
that.
because there's copy, which is in essence just going to be your digital. There's the marketing piece that's going to spark one's interest into what they should say yes or no to. And then there's also the correspondence that must be had as one, has that interaction. Can you explain deeper as to the sales training that you've been able to implement that then creates that excellence of sales culture inside of a business?
I'd say it's just radical transparency and a feedback loop where first we enable and sort of empower our team members to lose all defensiveness. And that starts with me. And so like my door is always open. I not only offer myself up for feedback, but I actually beg them to. Hey, if you see something I'm doing, just because you're, maybe a business development rep and I'm the COO and you have an idea or you see something that we're doing wrong or something I'm doing wrong, I actually invite that feedback immediately and I want that. And the second they see that I can take that and hear that, when I'm running a training session, I'm asking them the same thing. Hey, don't be defensive if we're coaching you. Like if we're trying to get you to a place where you can be successful and you can be financially free and you can have relationships and build rapport with all sorts of people. All ego and defensiveness sort of has to go away. And we have to learn how to do things because typically humans don't enter into relationships, business exchanges or value exchanges with subject matter experts. They're not buying cars from engineers who can understand how the engines work, right? They're
Right.
not they're not buying houses from civil engineers who can talk to you about the weight load and the wind load capabilities of the roof, right? People engage in interactions and value exchanges with people that they trust, that they can relate to, and with a value offering that they believe is fair or good or beneficial to them or their family. And so that's sort of the core, that's the stuff we put in the soup.
That's so good. I mean, you're not buying a software from the technical founder who only codes.
No, you're not. And typically if a founder is like a technical guru, um, very rare is the individual who is sort of like a technical genius and really masterful at soft skills and interpersonal relations. I'm not saying they don't exist. I'm just saying, it's rare to find, hard to find.
Yeah.
And sort of having a diversity in your workforce of talents and like how do you get that breadth of relatability with your target audience? And I'd say the second piece of the sales that I really like to train on is how do we how do we sell our product to someone who is only tangentially interested in our product or has low intent? And can we find populations or avatars that maybe haven't opted in all the way? They're not high intent, but we know they're right next to our typical avatar. And how do we train a sales professional to take someone with mild, lukewarm, or cold interest and get them to pitch, present, and sell in an effective manner where people engage in the conversation and hear about it from our sales reps in sort of a next to space. And that's something we've always done well. And I say we just the people I've worked with over the years in a couple different sales contexts is, hey, if we try and approach this thing head on, we're going to have a lot of turbulence from major enterprise players in the same marketing spaces. So how can we asymmetrically get as close to the space with Avatar as possible and then learn how to sell really well?
Let's create a scenario right now, almost like a role play around a scenario that one would have objections. I love to always do this because look, we're in sales, whether we like it or not. I personally love sales. I love interacting with people, getting to know what their pain points are, and just getting to know the relationship really. But let's create a scenario, right? You just called me, and you went through form, family, occupation, recreation, money. You're starting to find some pain points, but I've got a little pushback, as to what it is you're providing. This could be both product or service. It doesn't have to be what you're currently providing. What's your next step? Like, I'm literally like, I'm not sure. I need to go
Spouse. I
talk
need
to
to
my
go talk
wife.
to my spouse. I need to think about it. Yeah.
Yeah.
Yeah. So the way I've always operated as both a sales professional, a sales trainer and manager, and now how we run this company here is we don't provide, written quotes. And the reason for that is Usually, if you're telling me that you need time to think about it or you need time to talk to your spouse, that usually represents an underlying objection because human psychology is tough, and human psychology is telling you to tell me that because in reality you don't trust me or believe in the product enough, but you don't want to hurt my feelings, so you're just telling me you need to go think about it and talk to your spouse. And for our sales team members, the easiest thing for them to do is to give you a written quote because then it gets them out of an uncomfortable conversation of confronting sort of what is thought to be an implicit dishonesty in your request to get off the phone. The reason I bring up human psychology is because we always will tend to flee from discomfort and flee towards comfort. And I always am telling our team like, hey, the most successful place that we can be is the place that is the least comfortable. This person is telling you they want off the phone because they need to think about it. What they're telling you is they maybe can't relate to you, they don't trust you, and they're not sure of your value offering. It's one of these three. But they're not going to tell you that. They're not going to say, hey, Nathan, I don't trust you. So I'm going to get off the phone right now. Like, who does? It's just not polite, right? So they're saying a polite thing, I'll talk to you later about this. Okay. So we try and come back with, sir, ma'am, uh, in my line of work, I've been doing this a long time, licensed professional. Usually, when I hear something like that, there is an underlying concern. There is an underlying problem. There's something that you might not like or understand about the product. That's just been typically my experience. So I'd just like to ask you, is there anything that is making you hesitate right now from taking these savings that are on the table for you today, might not be on the table tomorrow? I don't know what's going to happen tomorrow, but I do know that right now I have you approved for this. And it sounds like you have some more questions. And I got all the time in the world. So why don't we just talk about them? What's on your mind? And I would always continue to try and keep that conversation going. Especially when you're talking about direct to consumer, not business to business. That's a totally different approach. But most of my professional career has been D2C, direct to consumer. If you're talking business to business, if they say they need to think about it, you need to ask some more probing questions. Like, what do you mean? Does it need to go to a board for review?
Yeah.
Who are the signers? It's a whole different conversation. But hopefully, I answered your question.
Yeah, you frame it, in essence, you kind of, you can repeat back as to what they said and just to make sure that you understand. I would also, maybe you could even address it knowing that those are the three specific scenarios that
Yeah,
people typically will address. You'll just say, "Hey, listen, you're not going to hurt my feelings. I do this
that's
for a
right.
living." Because that's just one of the oppositions that you're going to come
Yeah.
against. And then maybe, whatever else you just laid out, just simply state it right
Put
on
it
the
out there.
phone.
Be uncomfortable. I always
Yeah.
tell reps that it's very comfortable to send out a quote. You got like a 5% chance of ever talking to that person again. Just be uncomfortable. And if they see you being vulnerable, they might trust you to get a little bit more vulnerable and actually tell you what's on their mind. And then if they tell you what's on your mind, now you have a chance to deal with the real objection.
Well, we find that obviously in sales, like nobody really wants to be sold right
No.
off the bat, but they love to buy. We love to buy things,
Yes, they do.
you know? And it's really just important for us to understand that, as one who's either running a business or like you said, just speaking to people, because even in your position, you're the COO, you have a team, but you're always talking about people, or about the offering that you have, and in essence, a sales scenario that could quickly turn into, hi, I actually have a solution to your problem, and
Yeah,
this is what we
that's
can do.
correct.
So I think it's, important to have that understanding. um, Gosh, yeah. So in essence, you've got a company, and every form of sales is within the company. But I'd ask specifically how you've been able to radically transform the current, kind of your current company and some of the things that you implemented from leadership to team and then to execution. How did you go from, the garage to building out the sales team, and you know what I mean? What's
Yeah.
that process like?
So it was very different than it was, maybe in 2005 or 2008. I'm dating myself a little bit now, but you were talking about something that many people today would call revenue operations, right? They'd start talking about rev ops and automation of sales processes. And this is where I told you I left college the first time in, my late teens and early 20s, and I had to go back and do it later. I did it late 20s and 30s. And I never understood the breadth of the learning that I missed. And so, getting graduate degrees in business processes and data analytics, coming back to building teams, I was much more intentional. I'm going to map the process before I do it. So maybe in my 20s, I was building ad hoc sales teams, almost stream of consciousness. Hey, I have a thought. I'm going to do it. This is what we build. Now it's a little bit more refined. It's, hey, have a few thoughts. Let's talk to key stakeholders. Let's get their thoughts because now I don't think my opinion actually might not be the smartest one on the topic. It might not have the most valuable input, but we bounce the ideas first and then we map it. And we map it in a way where we think of it and treat it like a computer program because we are going to want technology involvement in the process, without a doubt. Right? In 2006, you're on a sales floor, you just have a PBX phone system, all the phones ring at the same time, it's ring all. Now you're talking about lead flows today that exist that engage AI bots. You're having follow-up communications that are automated and dynamic through your CRMs and your emails. And then your Salesforce is, either two-tiered or single-tiered, and the flows are complicated. And we map those out before we build them and before we execute them, and then we do not hold on to them tightly. And I think that's the really key part. What got us from one employee to 12 employees was not the same thing that got us from 12 to 40. And what got us from 12 to 40 wasn't the same process that was modeled from 40 to 100. And we knew that we couldn't go from 40 to 100 without a major capital investment or without an acquisition from a major industry leader or private equity group. And so like we knew, like me and my co-founder, we always knew it was like, hey, there's levels to this. Like we could stop at 12 or 15 sales reps and sort of keep it as a lifestyle business. Him and I could have a great lifestyle and there'd never be a middle layer of management and it'd be simple business processes. And if we grew bigger than that, we'd need more capital, which we went out and got, but we would need different processes and technology would have to start getting involved. And there'd be some drag with that too, right? You're going to lose some sales performance and there's going to be fee drag because of the tech. But getting from 40 to 100, we knew it was going to take a different type of capital base and a different type of process. So to answer your question is know your processes, map your processes, and if you don't know the process, don't be scared to ask someone. Start reaching out to people in groups like, the acquisition network or acquisition IQ.
Yep.
Start reaching out to people in your local business community at the Chamber of Commerce, like, hey, I don't know much about RevOps. I don't know much about sales automations, right? What do you recommend? Because if all you do is talk to people you find on the internet that you Google, they're going to be sales reps, and you're just going to go bouncing around from product to product to product. That's always going to be, a feed drag that you can't handle and you never sort of got your head around it. So that's a really long way to answer your question. I apologize for it, but
No, not at all. That's
map
good.
the process and hold it loosely because you're going to have to iterate it a lot.
So the level that you've gotten to the company now, you said you're past 100,
Hmm.
in essence, employees,
Place, yeah.
vendors, things like that. And then you actually did have an infusion of capital. Can you explain a little bit more about that?
Yeah, no. So before we got acquired, in sort of that interim level, maybe around between 12 and 20 employees, we realized that the free cash flow needs, because you're looking at the bank accounts all the time, you're like, well, wait a second. Growing a company like this, and if your revenue's coming in trailing on net 90 invoice terms, but your marketing spend is forecast out like for 30 days into the future, you got this 20-day, 120-day gap in free cash flow. But you're on a growth vertical like this. So the problem is inherent. You can't actually fund your own growth. You run out of runway. And so the initial invested capital, which was, several $100,000, which sounds like a lot, but it wasn't, not in our space at all. It was gone at the end of, 8 months.
You said, oh yeah, 8 months. Yeah, yeah.
Yeah, yeah. And we were sort of like, okay. And we knew we couldn't sell yet. Like we knew we didn't have actually an asset that was sellable at the time. And we knew that we had some identity issue. People were not responding well to the name Debt Busters. It turns out that it was a cool name, cool for the team, not really playing well in the larger audience. So we did two things at once. We raised capital through debt because we didn't like the terms that were coming in on equity. And we probably overpaid on that debt because we didn't want to give up any equity. and we rebranded as Debt.help. And that was, an expensive rebrand to do in the middle of our initial growth, but it was worth it. And the debt was ex again expensive, and that was because we hadn't been in business 2 years, and sort of an unproven entity on a fast-growing team in a space where there is no actual assets, right? We weren't developing technology. There was no code. There's no IP. There's no physical goods in a warehouse. They can't factor it. Can't do merchant cash advances, right? So it's a financial services sales firm. So the assets are the people. That's hard to get investment in. So we paid a lot for debt financing from other industry players, and that's what fueled our next round of growth to take us from,
What'd
20.
you end up negotiating that debt term? I'm
It
just
was
curious.
north of 30% APRs, under 40% APRs. So that
Okay.
depends on the note. We ended up with several different notes. Those were sort of the interest rates and APR ranges that we
Yeah.
saw.
Well, in essence, obviously, it's good because you didn't have to give up your equity, and now you're on a track of exiting, that business. Can you share a little bit, with what you can share as
Yep.
far as the definite or not the definition, but what you went through as a owner with the acquisition?
So it was my first ever successful acquisition, like a selling of a business. I had, a failed attempt twice in my background. One company that doesn't exist, and the other company does exist at the higher sales levels, but just decided to stop growing and stay private. Um, I knew it would be a lot of due diligence and a lot of attorneys. I don't know. It was sort of like having a kid. Everyone told me to, expect this or that when I was going to have my first son. I was like, yeah, 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 it's going to be fine. I had my first kid. I'm like, oh my God. So, uh, there's a lot of due diligence, and I was very grateful to me and my partner that we had set up everything the way we had set it up from the beginning. Even though it was had a lot of cost burden at the time that stood out large when the profit and loss when the gross revenue was low. Those line items really hurt on the bookkeepers and accountants and the structure. But it paid dividends later because when things were starting to get asked for, oh yeah, here's our ERP books, here's our data files, here's our bank statements that match and reconcile our financials, and we didn't do a bunch of add backs. We didn't have any like personal expenses loaded up into this business at all, so we didn't have to like sit there and do LOIs or LOEs on our add backs.
Hmm.
Um, so it was cool because we had prepared and mapped intentionally. It was still a bit intense in, hey, we've shaken hands, we've come to terms in principle, and now we're going to go on this 60-day journey that's usually led by councils. And a lot of random things can come up from different angles, whether it's your human resources policies. Do you even have a human resources policies? Like we were a California company, that was a major point of concern. Thankfully, we had brought in a PEO organization because we realized this was a weak spot. We weren't going to be able to get acquired unless we had strong HR. We knew we couldn't fund strong HR in-house, so we brought in a PEO maybe 7, 8 months before we started looking for heavier
Smart.
capital. And so that helped bolster us. And it was just it was a process. And I didn't think I realized beforehand that it was going to cost money in that process, but it does. Even if the sale doesn't go through, like if you're an entrepreneur and you attempt to sell your business and you go into an LOI and it doesn't successfully close, well, you're still going to have incurred cost through that process of the LOI and the due diligence period. Um, I'd say the cool thing that did happen is I was able to talk to a couple other people who had interacted with our acquiring company before on an M&A basis, and getting that feedback is something I would recommend to other people who find themselves in the same space. Have you talked to someone else who's dealt with the people who are acquiring you in a similar manner, right? Like,
Yes.
and being able to talk to like real people that existed that had, worked with our acquiring, company in a similar manner, it was like, okay, cool. We can sort of take them, the goodwill is the goodwill, and what they're saying is the A's are A's and the B's are B's. Because I've been a part of processes before where that wasn't the case, and it's always very shifty.
How many rounds of negotiations did you have to go through to get the price that you were wanting? And how did you start to set the terms and use leverage points to get your highest multiple?
Probably 2 rounds. We didn't really go back for a third because we we thought we were in not a weak position, but not the strongest. We hadn't even hit 2 years since, revenue production began. We hadn't filed 2 years of tax returns. Our growth was meteoric, but we were also running out of cash flow, and
Mhm.
they knew it, and all the other parties that had been talking to us knew it too. They knew one of two things was going to happen. We either had to stop the growth completely and stabilize, or you know, find
So,
massive infusion
or yeah, or get more
or
capital.
more debt, right? And we had an offer at the table for more debt, and so I'd say we disclosed that offer. Like, I don't know if I'd call that leverage. I'd just say maybe that's transparency that gave people things to think about. Like, we do have an alternative here. Like, we have
Yep.
this
Yep.
financing vehicle that's ready to go that is zero equity. It's 100% debt. And even if the counterpunch to that is, yeah, you're not going to be able to take much profit with those high interest rates. Amazon didn't take profit for what, 20 years? Like, and I get that everyone cites that example, but the point is our mindset at the time was growth, not profit taking, not distributions. So, um, we had that transparently available. Hey, we have this financing offer. We have an alternative in place. Um, but that was it. 2 rounds. I don't think we were too intense in our negotiations. Their starting offer was fair. And the way we had met, we weren't even really on the market for sale. We didn't have a business broker who had listed us or anything. It was just some people knew we were out there looking for capital because we were really on the set. Our initial mindset was, let's hold the company another year or two. Let's go get debt. And then these gentlemen approached and said, hey, we think there's another path that you guys should explore. And we ended up liking it a little bit better.
Man, I love this. This is such a good story. I think more founders need to understand what you went through. You went from intentionally developing a company that would be worth buying, right? And then you had structured it all accordingly. You had obviously it wasn't perfect. And again, what are some things that you learned throughout this process? I think that's probably one of the biggest things. Some takeaways from your initial, because now I mean, it's 2 years. You still know what you should and shouldn't have done.
Yeah, and we're still making mistakes. I'm still making mistakes right now. So me and my partner were talking this weekend about, things that we need to get better at.
Yeah.
And so one thing that I think we both regret was the pace of growth.
Okay.
I think we over redlined ourselves multiple times. Um, it was fun, but it was reckless. I sort of feel like a MotoGP racer maybe just went a little too close, maybe a little bit too much lean angle a couple times. Um, and it almost caused disaster multiple times. Like, if we hadn't had relationship and community in the business community, in the industries that we were operating in, um, and been known as, hey, they're good dudes, they're doing good work, they're not going to poach your people, anything like that. We got bailed out a couple times from wrecks. So I'd say we overheated the engine twice, maybe 3 times, and when you hit a 200% growth rate in a single month or, 40-day period, you got to watch out for that because there's really no way to fund that, especially if you're undercapitalized. And
Yeah.
you
Yeah. Because, and then you can't really predict per se how fast you're going to grow. You
no.
know what I mean? You can only just try to grow, and then all of a
And,
sudden
no, and
you're
that's what
like,
happened. And then it was like, but even then, like we didn't throttle back, and maybe we should have. The other thing I'd say is this. While I've been very successful at training new sales professionals and my partner has been very good at building company culture and we've been engaged doing the things that we're asking people to do. I think we need to do a better job in the past and today of training other leaders to come up beside us and
mm,
really empower them to take the next steps in their careers. And so I
that's
think
wise.
that's what we're focusing on right now. Like, how do we trust more and how do we not do less, but sort of make ourselves a little bit smaller, but still be present? Like, I don't want to be an absentee owner at this point. It's not on the table. But how do I help people take their next step? And in the process of doing that, how does that help our firm? Because it's needed. Like we've gotten to a size where my sheer will of what I think should happen or my energy level or however much I want to show up on a holiday and work that's not going to drive us from 100 employees to 200. That's not going to drive
No.
us from 70 million a year in revenue to 150 million. It's going to be a much bigger team. And that team if I want to stay true to what the company is, it needs to come from inside. So I'd say those are the two things I would do differently. I would slow down growth a little bit. And the second thing is invest more time in training other people how to do the higher level work. Like help them, like even if it doesn't come with pay, like they would, like your sales managers would love to manage a vendor relationship. Like they would love to do that, right? Because
Yeah,
it's
just start
that's
giving
business.
them challenges that enable them to feel a little bit more empowered as
Yeah.
opposed to non.
Yeah,
Um,
absolutely. If they think it's just a job, you're going to get just job results, right? And it's so that, and when
that's good.
everyone uses the buzzword culture. I get it. Everyone uses it. Byron and I never ask, people to show up if we're not going to show up. We take people to dinner. We spend time, meet their families. Like that is sort of, but I understand that's not available at 3 or 4 thousand employees. But at
Mm.
our size, that's a lot what's happened to build the culture.
It's interesting though because the founder is typically one like yourself who has a gung-ho attitude and is a roll up the sleeves, I'll do whatever it takes. And that doesn't actually even get you to whatever level that you're talking about from 100 to 200.
No.
It's not even that. It's extremely strategic. It's playing chess and not just checkers. You're looking at the big picture and you're starting to implement, and also become more of the leader and the visionary as opposed to operational professional. You know what I
Yep,
mean?
that's correct.
So
And
anyway,
how do you map
well,
that out? And like, that's what we're doing right now. We're mapping, just like how I've said, we map 12 to 40, map 40 to 100. The BPMs that we're drawing up today look nothing like the BPMs that got us here. These business processes look very different. There's going to be a little bit more management fee drag. Our margins need to be a little bit more efficient in other places to make up for it, but that's okay because that's what it's going to take. It's going to take us to be really intentional, map the business processes, empower other people to be leaders, and then sort of orchestrate the whole thing and lead the whole thing from the front, but not necessarily as a specialist or doing the things.
I've got one. Well, probably I'm sure we could probably banter for many, many hours actually on this specific topic of growth, development, culture, and scale. But can you share with us real quick the technical, when you say map, what exactly do you do when you map, and how do you set up a session that would be very valuable for somebody? I know you say map, but maybe it's physically drawing one
No, it
specific
is. It
use
is.
case.
And it's
Yeah.
business process modeling or business process mapping, right?
Okay. Okay.
Those are the two terms that I've seen used for it. And to me, it feels like an ERD that's an entity related design that comes from the data world. And so I told you I'm a nerd, like my second love's data.
So
And
to
so
me,
I
I
got this.
like it too. Yeah.
Yeah. So, when you're talking about data architecture, you use these entity related designs to show how the different pieces of your business intelligence system is going to work together. A SQL database is going to be over here and it's going to be, this symbol. And we're going to have our SSRS server over here and it's this symbol. And we're going to use this Power BI over here and Power Automates over here. And you map it all out and they all have symbols. And so the business process modeling is very similar to that. Instead of just tech pieces, it's all the pieces, right? And so, you might have a symbol representing, a group of humans or an individual human, a team member. You might have another symbol operating a computer structure or a computer application or a web-based application. You might have a different one for your CRM. And your CRM is usually going to have multiple aspects to it. It's probably talking to other things. Maybe you're using something codeless like Zapier, or maybe you're using built-in integrations, but no one's using just like, Salesforce core, right? You're going to have other things on it, or you get whatever CRM you're using. If you're using something different, or you built something. So when I talk about mapping, how big are our sales teams going to be? What's that look like mapped like? Okay, do we have one leader here and they're responsible for everything, time and attendance, culture and sales training, or do we have a second coach, like a performance coach that focuses on sales, another one doing, and then where does that information flow to, and how does it come into your progressive discipline policy? Does it flow into like a sort of HR people team center that then enforces progressive discipline, or your manager's doing that? And while these sound like abstract questions that maybe aren't important to your team at 15 employees or 40 employees, without that process mapped and implemented effectively, managing 150 or 100 people is unwieldy and it's uncontrollable.
Yes.
Right. And so you have to have things like this set up ahead of time, right? What's the relationship between our openers and our closers, and what's that mapping look like? And what happens when our managers have disagreements between sales teams or between our BDRs and our closers? And that needs to be mapped. How do the decisions get made? How do they get arbitrated? And so right now we're in the process of physically drawing out the maps of how we have to go from where we are today to something that can support 250 employees. That's our target, is 250 on this next growth
Have
track.
they created an AI map tool for business systems creation?
Oh, that'd be cool.
Yeah.
That'd be cool.
Yeah. I don't
Right
know.
now I use something like Dry. There's a few
Yeah.
tools, but none of them are making recommendations. There's no autofill yet
Yeah.
on them.
Yeah, it's interesting. Yeah, because we're seeing a lot of advancements in AI, and I just been obviously interviewing a bunch of people that are buying and selling companies and creating efficiencies within organizations, and I'm like, wait a second, is this another entry point
Yeah,
for technology?
could this be the light bulb? Yeah, could
Yeah,
this be
yeah.
the thing? And is it a product? Yeah, absolutely.
Well, look, again, we could probably talk for hours, and we do really appreciate you coming on the Acquisition IQ podcast as well as helping to build the entire network as a founding member. So for that, we thank you. We are excited to have you. I don't know if you have committed fully or if you'd like to be a part of the AquaCon conference, but guys, ladies and gentlemen out there, if you guys haven't heard or if you have heard, AquaCon is coming to Salt Lake City on September 3rd, 2025.
It's gonna be great. I'll be there.
Well, and it will. And how we've structured the room, it's very curated. So individuals just like Chris here will be seated at 8 people per round table. And as far as that round table goes, we'll have about 300 individuals at this conference. We'll talk about fund creation and how you can develop your investment fund. Then we'll move on to how you can acquire companies and then leveraging financial, like you, for example, you leveraged debt for a little while. And
Mhm.
then we've got private equity, family office, venture capital, or you have, a high net worth individual for that capital stack. And then moving on, we've got our sell side panel, which we'll discuss obviously prepping for sale, making sure that we have maximal value upon your exit, and really just an overall experience that the operator of a company, an M&A service provider, or a seasoned investor would have a great time meeting with people like Chris or meeting with others that can speak the same language that's been there, done that. So that's what we're developing at AquaCon. We would look forward to having you guys there as well. If you like today's episode on the Acquisition IQ podcast, feel free to like and subscribe on our YouTube channel, and then also send this to your founding friends who are scaling their companies that have sales teams that have, various systems that need to be mapped out, like what we discussed earlier today, and then just loves data, So anyway, thanks a lot, Chris, for joining
Thanks,
us.
Dave.
And we look forward to making more podcasts just like this for you guys out there.